You know, one of the biggest lies traders tell themselves is that confidence means having zero doubt, when in fact, today's trade proved completely otherwise. So today's trade setup just so happened to include my A++ I'm about to bust model, and it netted in just a little over $1,400. But the crazy thing about it is I may have hesitated to even take this entry in the first place. If you're new to the channel, make sure to subscribe. I'm dropping videos daily documenting this entire journey to profitability. I've been trading a little over a year now. I think it's about time we locked in and ran this up for real. And you see, coming into New York, I wasn't necessarily looking for just anything today. I definitely knew exactly where I wanted to place my trade. We have a resting monthly fair value gap sitting right below the monthly fair value gap that we are currently displacing through. I want to see bearish continuation. Of course, hopping on to the hourly, I was very extremely bearish still. We just broke structure to the downside. We filled a fair value gap and pushed lower. The sellers are clearly in control right now. And if you notice right here, we are continuously making lower lows and lower highs. So in my eyes, everything looked good. Once market opens and I see this displacement inversing a 15-minute gap, as well as selling off completely below Asia and London lows, I see that we have only about 200 more points until we fill this next monthly gap. Also, this candle closure tells me that we want to continue lower. And if you notice this 15-minute fair value gap right here, that's going to be extremely important later in this video. But honestly, at this point, I'm really just looking for a fill into that 15-minute gap and a continuation shorter. I want to see us tap into this 15-minute and then having that reversal lower. And at this point, everything still looked good. And once we drop on down to the 1 minute, we end up displacing inside of this 15-minute gap. We're inside of the start of a macro time, which is the highest probability times to trade. I'm really just waiting for the actual entry. And boom. We're at equilibrium of the gap. We take internal liquidity and then we inverse this fair value gap. So tell me, why was I still uncomfortable trying to take this trade? And I will let you know now, this is where experience actually matters in the markets. The first reason I was actually a little bit hesitant to take this trade was, if you see on the 15-minute time frame, we actually came up close to filling this gap and continuing lower, but we didn't end up filling the gap. We still took out that internal low that would have been our draw on liquidity for our original trade setup. I see a clean 3 drive pattern with a new 15-minute gap getting created. I'm starting to think a little bullish here. And this next thing is what most traders literally ignore until I actually started looking for it for myself on the charts. We have the makings of an accumulation, a manipulation, and a distribution leg back up to these highs right here. So we could be in a higher time frame AMD model, which is honestly what it looks like, or which is what I thought the higher probability was. We are getting a continuation, a retracement into a higher time frame gap to then target the monthly fair value gap that is 200 points below us. We've seen the markets dump furthermore before. Like, let's not even second guess ourselves. The last and final reason why I had so much hesitation taking this trade was that if we did get our inverse, we would be shorting into a 5-minute gap after a clean breaker block. And this would be the first fair value gap presented on this leg up. So if anything, if we are bullish truly, this gap should and would hold to these highs up here. So I'm thinking I need to be very aware about where I take profit and where I want to actually enter. So the question stopped being, is this even bearish? And more so, does my model exist right now? Which at that point, the market kind of just simplified everything for me. I have a rule to where if we get our inverse within the first 5 candles, those are the highest probability inverses that I can take as far as volume and strength of the move. Also, this is the main reason I wait for these fair value gaps to close on specific ranges like this. Once we confirm that sellers are in control right now, we actually finally take entry at the candle close. We have our stops at the body high, being very, very conservative, and we end up taking about 40 points from the market, which ends up actually playing in about 3 minutes. This is exactly why I wait. As soon as we took profit, a mega Drake candle, that's crazy. Wow. Out of nowhere would have stopped me at break even if I had my break even right there in the first place. This 5 minute ends up getting respected, and we do exactly what we're supposed to and go target the highs of the previous session. And honestly, seeing this live play out, the fact that I took entry and exit at quite literally the perfect time before price turned against me, it gave me all the reason to stop predicting and start executing as objectively as possible. Everything set up perfectly, and I didn't need to catch the entire move. Getting into this trade wasn't actually the hard part. If this was me of even just a month ago, I would have not only held till the exact bottom or external lows of this range, but I probably wouldn't even have taken profit where I was taking profit at, just because this is an evaluation with a 50% consistency rule. So the amount that I make was specifically at 40 points. And the thing about it is, this is normally where the version of me who's very stuck on greed would show up and not only hold this trade, but not go break even inside of the 5 minute gap, not really be aware of the other situations that are forming around me that go against the actual trade, because that all just comes from sticking to how much money am I making instead of, is structure supporting this trade? Is this the highest probability that I can get out of this model right now? And the part that I love about it is that ironically, everything that I thought in real time about why I shouldn't take this trade was exactly the reason why I shouldn't have taken this trade. But the fact that my model still showed up and everything that I'm looking for was able to still be shown, the consistency rules of an evaluation kept me within the guidelines of how much I need to take out as far as points and profit. It gives you kind of that eye for, yeah, this model works and it's a high win rate, but it may not afford me 250 points. It may just only give me about 80 points instead. So in the end, I didn't need to catch the whole move. I just needed to catch the part that my model was built for. And it's funny because today's trade actually reminded me of something that I wish I understood years ago. And it was the fact that confidence is not certainty. And just because you're confident about the trade doesn't mean it's going to play out for you, or that the conditions were actually all A plus, or any of those things. And great trades, they rarely actually feel perfect, because you're never going to be able to predict or control what you want from the markets. You may not get the 200-point move, even though the setup for it looked amazing. You might only get 40 points, 50 points. And I wish someone explained it to me like this when I asked, but that mental switch from prediction mindset to processing is literally that ability to understand what's going against you, what's going for you, and where realistically you should take profit if you were to enter any trades. Whereas I think most traders think of it backwards, and they'll understand where their profit and stop loss should be, but the structure that's actually afforded to them isn't in the highest probability to produce that type of move that they want, just because the entry criteria was what they were looking for, if that makes sense. At the end of the day, you don't become profitable by eliminating uncertainty. You become profitable by not letting uncertainty control you. So where do we go from here? Another day towards the consistency rule. We have one more day if we want to follow the same pattern we did today. Tomorrow is FOMC, so there should be good ass setup. Stay tuned tomorrow for that. But it's the same thing. Process. We're going to be as objective as we can. Tomorrow is a completely different test. We go into it locked the hell in. We're back at it tomorrow. The markets get another chance to take me for everything I'm worth, and you're going to watch every minute of it. Subscribe.